Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Ink Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Grade A Plus Award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Jim, it's great to be back.
Ted, of course, all the questions nowadays are connected to the coronavirus and its impact on business. So far, what kind of an impact have you seen from it?
Well, in terms of the investment community, really what we've had a big dose of fear, obviously. People rightly concerned in at least some corners of the market that it's going to crimp growth, such as in energy. We've seen the oil price collapse, similar to what we saw under SARS. I'm apparently I'm not supposed to make references to SARS or anything. You're not supposed to make any references to anything in this virus. Every time somebody says, "Oh, you can't compare it to SARS. You can't compare it to the flu." Okay, but we have a few examples of what happened in the past, and SARS is not a bad case study in terms of what happened in the markets back then. And yes, the oil price took a hit then. It's taken a hit now. Whether it will stay down, we'll have to see how long the fear surrounding this virus continues, and whether people get back on the planes, keep their travel plans in place, and that will be unfolding over the next few weeks. So we have I don't want to say predictable response, that you would get the natural response, people pulling in their horns a bit, taking chances, going to play with this, the risks surrounding this. So that is having an impact on the travel industry for sure. It's having, will have an impact on supply chains. Now, you wouldn't know it looking at Apple stock, because the last time I checked, Jim, Apple, not only did they have economic exposure in terms of customers to China, where, this virus is hit hardest, but they also have production exposure, but that doesn't seem to matter. So, on the one hand, you've got the people in the oil market, investors in the oil markets, in fear mode, and then you've got the tech market in the U.S. And what could explain that, Jim? What could explain that? There's really one answer to that, and that is, in the United States, we've got a double barrel assault on keeping the market up going into November. It's a topic we discussed on Ink Ultra Money over the weekend. There was a nice discussion on that, and I can tell you that not only have you got the Fed pumping in liquidity like no tomorrow, you've also got the Treasury. And I just saw something now that the U.S. budget deficit is blowing out much more than expected already in the year. And I was just reading that on Forex Live that the U.S. budget deficit came in at a well below as a negative, like as in deeper than anyone had really expected. So we've got a lot of liquidity coming in from, I call it Washington, because you've got the U.S. government. Okay, so here it is. U.S. January budget deficit, $32.6 billion versus $10 billion estimate. Now, look, maybe there were some one-time explanations. Perhaps I'm sure there's going to be somebody out there who says, "Well, don't worry about it. It's not a big deal," but it's big. And so, what does that mean? Well, it means the U.S. government's spending a lot of money, putting a lot of money into the economy and into the markets in the back door by the way the Treasury funds itself. So you've got a massive dose of medication, Jim, to deal with this virus issue already in the system coming from the U.S. So this scare we had in the U.S. So Apple's been able to shake it off and keep going here, whereas other parts of the market have reacted differently. So this is quite a fascinating market to be in when you've got massive amounts of liquidity meeting the realities of the real world. And in the U.S. market right now, it's the liquidity that seems to be trumping the real world, no pun intended.
We'll have more with Ted Dixon right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Ted Dixon. Ted, what's happening with your Canadian Insiders group?
Well, right now, by the way, we've got a nice Valentine's special on for anyone who wants to join it. So just please go to the CanadianInsider.com website, and you can see right at the top what we're offering, $200 off for a limited time, limited time being Valentine's Day. And what we've noticed that's coming across our discussion groups and kind of what we're seeing in insider filings is liquidity. It's what we talked about before the break. We've got this almost never seen before amounts of Washington intervention in the markets. And where is all that money going to go? Well, we've seen where some of it is going, and how are insiders reacting to that? Well, we've got, again, a nice sort of two states of the world. We've got the U.S., and we just sent out a report this morning to our subscribers, and basically we are one indicator away from sending what I call the wow alert. And we sent that wow alert out into the early summer of 2018, where we indicated that the case for the continuation of the bull market was getting weaker. And we didn't we didn't say it was the top, because we know that when you've got a liquidity driven market, you just don't know where the top is. And I don't know where the top is in this market. But we're close to getting a signal that basically suggests people should be taking money off the table now in the U.S. market. Now, we're not quite there yet, but we are at a point of caution, extreme caution. For example, our Wall Street indicator, which looks at what insiders are doing in the investment bank and brokerage business on a 30-day basis, Jim, it's gone down to zero. Zero meaning there's no insider buying in that group. Okay? We don't see that very often. All right? And we're just waiting for one other sister indicator of that Wall Street indicator to also head down to that level, and then we've got our wow alert. So we're keeping an eye on it. Insiders in the U.S. industrials area are very, very downbeat, and that's the real economy area. So yeah, insiders in the U.S. are really warning of trouble ahead at these lofty levels, and insiders are contrarians, so they don't tend to go with the flow. So yeah, they tend to be party poopers, kind of like the central banks used to be back in the old days. You know, the old days being I don't know, pre-Greenspan. Somewhere along the way they became the party enablers, and that's clearly what we've got right now. And at some point, though, even the enablers, they check out. They check out or get exhausted. So we will have to see how long this fun rally goes. But the insiders are certainly giving a warning sign. Now in Canada, we were quite optimistic about the broad Canadian market going into the year. But of course, then the virus hit, and that did throw the energy patch off its feet. It's a really unfortunate. It's really too bad in that, I think now a lot of companies were starting to see some real caution take place. We saw a little tiny company, Razor Energy, suspend its dividend. Now maybe that's a one-off, but I suspect with Canadian crude prices tumbling here, all of a sudden you're going to have company CFOs really kind of saying, oh, wait a minute, maybe we shouldn't quite drill that well this month, right? So, it is very unfortunate for Alberta. It was just starting to get some momentum, and Saskatchewan, just starting to get some momentum, and they got hit by this. Now, the good news, I think, is eventually China will throw a lot of stimulus at this. And I wrote about this out to our large group at Canadian Insider today. I think the good news is we're going to see some China stimulus. The Communist Party in China, really has to regain the confidence of its citizens. And one way you can do that is by stimulating the economy. And so I think we'll see that, and that should eventually help the oil price. And we could get a real, depending on how depressed the oil patches get in North America, we could see a real run in crude once things turn around. Because if we start seeing companies cut production, even little bits, and then China puts on the gas in terms of economic growth, you could see a situation. I know, again, I'm going to compare this to SARS, so forgive me, but we saw what happened after SARS. China was in a stimulus mode. Now they were also in a different part of their development cycle. They were just getting some momentum on the trade front. But coming out of the SARS disaster, oil went from I think it was $35 a barrel, something like that, maybe even lower, all the way up to 150. So. I'm not suggesting we're going back to 150. I doubt it that we'll ever see that again, but hey, who knows? But we could be in for a bit of a squeeze once things start get going, but we are not there yet. But that the oil patch will be something we're going to keep our eye on with insiders. If these oil and gas stocks continue to weaken off, and by the way, most of them have not hit their August lows from last year, so they're hanging in there. So that's a positive sign for the medium term. But yeah, a lot of the steam was taken out of them with the coronavirus. But look, I'd be looking for base here to see which ones are consolidating, and really keep your eyes on it, because I think before you know it, they're going to be back in play. And as China gets back on its feet from the coronavirus. So in sort of the medium term, energy is going to be a very interesting and potentially quite profitable play, but we're going to have to be patient to see how all these dynamics work out in the short term.
We'll have more with Ted Dixon right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, could the play be to take your money out right now, wait for the market to either collapse in almost a year or 8 months, whenever the election is in the U.S., and then dive in and look for a bottom there?
Well, market timing is very hard, and fortunately, we do still have opportunities in the broad market that, but not a lot, but we do come across some very interesting plays. We write about them whenever they come across our screens. And I'm not suggesting for a moment that everybody overweight the gold sector, but that is one of the three areas we're looking at. Gold mining is definitely in play now. And whereas, the majors have kind of been, a lot of them, like Barrick, for example, have been flatlining for the last 6 months after a big move. We're starting to see some nice action in the juniors, Jim. And, again, we write about them, daily, not necessarily a junior miner every day, but whenever we come across one that hits our screens, we write about it. And they've been behaving quite well, even as kind of gold's been kind of consolidating here. We're seeing some nice bids in some of the good junior miners. So there is some opportunity there. And some of them now have got to the point where, they're not even penny stocks anymore, that some of them are trading, over $1 and a little higher. Some of the ones that don't have massive share floats, are trading really quite well. So there is opportunity there for the risk tolerant, those who don't mind the ups and downs of that market. And we do come across some industrial companies. The auto industry has massive amounts of bad news priced in, Jim. I mean, these are, where you've got Apple trading at, a massive, PE. Like here, let's see, their price to cash flow I have at 2. And then you go and you look at a company in Canada, like Linamar, which is an auto parts maker, which is in the Canadian Insider Index. It's trading at a price to cash ratio of 3.2. Okay? So, take your pick. You've got Apple that are trading at a price to cash flow of 20, so 20.1. And it's ignored the bad news. I mean, Wuhan virus, who cares, right? no one cares. It's Apple, right? Linamar, solid, long time auto parts company, profitable, but wrong industry. No one's going to drive, I guess, anymore. Everyone's going to drive a Tesla, I guess. I don't know, but whatever the bad news is, to me, in a stock like Linamar, and I'm not recommending it, this is just a contrast, a difference, so I don't know. In the next 10 years, even the next 5 years, I don't know, Linamar versus Apple at this point. It'll be an interesting one. Now, one's a mega cap, the other's a mid cap Canadian, so it's not really a great comparison, but you get the drift. I mean, there's other stocks that are similar, and we'll just have to see. But this Apple run certainly has been extraordinary, and those who have been fortunate to participate. You might want to look at taking some profits. That being said, we still have a mostly sunny outlook on it, which, based on our signals, is still in a group that's going to go up, potentially, and I mean a group. So within a group, you could always have one or two stocks that don't go up. So the group word is very important. It's interesting that all the bad news, Apple's got a Teflon coating. And these auto stocks do not. They everything sticks to them. It's just the opposite. They've kind of got 3M two-sided tape all wrapped around them, and any bad news that comes out, it just bogs them down. So there is some contrarian plays out there for those who are willing to do it. Not necessarily. Wouldn't necessarily. I think Apple will be one of the last big cap tech names standing. Only, because you've got so much passive money in, you've got, central banks buying out, at least one. Last time I heard that the Swiss central bank was buying Apple now, then maybe they've changed their policy. It's got a lot of people are into that stock, Jim, and we just, until these passive flows start to abate, it's going to continue to get some support. So, But there are two different worlds, and there are, to your question, there are some opportunities for those with a time horizon of more than 6 months. But we write about them, and so far, actually some of the auto-related names that we've mentioned in our morning reports, have done all right here. But I don't think that story is still playing out. It's still got a long time to play out, and we'll have to see, in the short term what happens. But boy, they've got a lot of bad news already priced in.
Ted, thank you so much for being on the show.
Thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.